Welcome back to another edition of the Real Estate Insights Conversations with Industry Leaders. And today I am excited to bring to you a good friend of mine, Steve Bell, Harding Bell International Incorporated. Let me introduce Steve the right way. So Steve is a prominent figure in the real estate industry, serving as a partner at Harding Bell International, or otherwise known as HBI, with a base in Kissimmee, Florida, and an office in Lakeland. HBI specializes in providing comprehensive tax and accounting services. Steve's leadership and expertise have been instrumental in guiding the firm to cater to a diverse clientele, offering personalized solutions that address the unique needs of each client. His approach combines a deep understanding of the real estate market and a keen insight into the financial intricacies that impact both domestic and international investors. So Steve, thank you for accepting my invite to come on here and talk to us about what you do and provide some advice for the average real estate agent on what they can do to maybe save some money in taxes and maybe stay out of hot water with their reporting.
Awesome. Well, thank you, Paul, for having me on. I really appreciate it. Always love to be out there and support the real estate community and investors. And it actually sounds pretty good. I'm glad that we do all that stuff. So, but I'm excited about that. Also, we have an office in Lakeland, Auburndale, Lake Wales, Longwood, and this is probably hot off the press. Probably shouldn't even tell anybody. We are opening an office in Sarasota. That is going to focus a bit on FIRPTA and the international stuff, but we will still do everything, through that office as well. So exciting stuff. Really excited. As well as being an owner with Harding Bell International, along with my brother, I have several unpaid jobs. One of which is I'm the state treasurer for the Florida Alliance for Vacation Rentals. Also serve on the global committee with Orlando Real Aura, and then my biggest task this year is that I'm the president of the National Association of Hispanic Real Estate Professionals North Orlando chapter this year. So keeping busy. So,
yeah,
but yes, definitely. Thank you for letting me kind of share that information as well.
Absolutely. Look, we appreciate you, Steve, and all that you do for the real estate market in the Central Florida area. I see you out everywhere. Anytime I go to an event, there you are. And that's important for agents to understand, is that you're investing into the real estate market to help support real estate agents, right? Whether it's educational events, whether it's just, through these different boards that you're serving on and the events that they do. And I just see you always sponsoring different things. And so it's really important that agents understand that, when we see these sponsors at our events, that, get to know them and, do your best to try to use their services, because one hand washes the other, and we need to support each other in this business, because if we lose our sponsors on the things that we're doing, then we can't do the things that we try to do. Right. So,
right. Yeah. Yeah. And it's really not even just sponsorships. And we do sponsor some events, but a lot of it is we do a lot as a firm. We do a lot of education for realtors, such as FIRPTA classes with CE. I actually do teach a class, and we have some others on tax for realtors. I know we'll talk about some of that stuff today. Also working with international investors as a realtor. So yes, it's not, and for me, Paul, and as a firm, we have so much experience working with realtors and investors that we know that a lot of times the realtors, hey, I'm looking for an accountant that specializes in this. We're typically one of the first ones that people mention, and we're thankful for that, because we want to continue to grow that and help people.
Well, that's great.
Certainly.
That's great. And in fact, I'll be using you this year myself, as we talked about. We've been a do-it-yourself type thing using TurboTax because, pretty simple. But this year, our return is a little bit more complex. And, we want to make sure, number one, that it's done right. Number two, that we've maximizing whatever we pay to Uncle Sam. We want to, okay, we're paying our fair share. We just don't want to pay more than our fair share. And of course, we want to reduce our risk in potential audit. So that's where the services that you come into are going to be very beneficial. And I look forward to coming into your office and sitting down with one of your team members and getting all that squared away. So you touched upon FIRPTA, and I've actually sat in probably twice in and I forget her name. You got a great teacher.
Probably Nina Mills is the head of it. Basically, has been a big part of our firm for years in the FIRPTA. We call her the FIRPTA queen, just because she knows more about it than anyone, I think. So
Yeah, and it's really important for agents to understand that, right? Look, we don't have to know everything about FIRPTA, but we need to know enough about it so that we can work and counsel those that are going to be required to deal with FIRPTA, because there's a lot of international buyers and sellers in our marketplace. So
Yeah,
it doesn't
absolutely.
matter whether you're part of global or an international agent yourself, you're going to deal with buyers and sellers at some point that have to go through FERP and
Yeah.
make their filing and everything else. So you need to know enough about how to handle that and what you need to know. So,
Sure, sure. Yeah. And for
um,
people who don't know what FIRPTA is, and that if you have some new viewers, FIRPTA stands for Foreign Investment Real Property Tax Act. In essence, whenever a non-US resident sells a property, and sometimes corporations as well, depending on the type, there's a requirement to withhold 15% of the proceeds back in case capital gains tax is due. It's not a tax itself, but it's withheld until the IRS decides, hey, this is how much you owe, and this is how much you get back, etc. One of the things, like you mentioned, Nina, I think one of her catchphrases, if I can get it right, is you don't have to know everything about FERPA. You just need to know who to call.
yeah,
And that's
that's right.
how we try and help people in that ways.
Yeah, so and that's good. And of course, you would be the one to call and say, "Hey, I've got, an international seller. How do we work with this?" Or
Right.
maybe, you're working with a buyer, but there's an international seller on the other end, and maybe they don't have a FERPTA disclosure uploaded to the MLS
Yeah.
yet. And you're like, what do I do here? Yeah, definitely,
Yeah.
good place to reach out and
Yeah.
get some more information.
Exactly. Yes. Yeah. We've over the years we've seen pretty much everything you could think of when it comes to FERPTA regarding situations that arise, and a lot of times we've been in a good position that people will come to us many times after they may have used someone else for FERPTA, and either they weren't as experienced or things went south, they went wrong. We're typically able to sort those out because we've had such a long-standing relationship with the FERPTA department with the IRS, which, by the way, is very small. It's not a big department. Basically, our people know we have a whole department that's all they do is FIRPTA, and they know the agents in that department by names just because we work with them and we do so many transactions. And we probably do roughly right now. We do over 1,000 FIRPTA transactions a year at this point. So certainly our team has that experience in doing those. So
Well, that's great. And that's what you want, is somebody that's experienced and it's got that that open door with the IRS, right? To make
yeah,
sure the things get executed. Because yeah, if they're working with a small crew there at the office, they're going to be backed up and it's going to take some time. So having the right people certainly is going to make a
yeah.
big impact. So let's talk about some strategies, some tax strategies for real estate agents. And what are some of the best tips that you can provide a real estate agent right now? So people are going to be wrapping up their 2023 stuff, right? They got to go back and maybe it's too late to spend some of that money to get put on the 23, but how do they wrap up 23 effectively and plan for 24?
One of the things, I mean, that realtors need to be aware of is that there's a lot of deductions you can take, and you've got your auto expense. You just have to be careful how you calculate that. You can do a couple of ways. You can do by mileage, or you can do actual expenses. I believe for 2024, the mileage expense is 67 cents per mile. If you have a larger vehicle, such as an SUV, a wrapped vehicle, thing like that, you could typically taking actual expenses such as depreciation and everything that's encompasses on that makes more sense than taking mileage. If you're driving a Prius, you may want to take mileage. You're going to get a bigger deduction by doing that. And one of the key things, Paul, anytime you're taking mileage expense, or even if you're using actual expenses, is you want to keep a mileage log. And I know it's cumbersome, and that's anytime you're not using it, you're using the vehicle not only for personal but also business. You want to keep a mileage log. One of the things that people can use is Mile IQ, for example, is an app out there that many real estate agents, and there's others out there that they can use. Just really any kind of system that works for that. Now, I'm going to give you a little tidbit that most people don't know, and this is a little secret. If maybe you live in an apartment, you don't have space for an office, and your main office is 30 miles away or whatever, you can open a P.O. box close to your home, go to that P.O. box before you start your day, and the rest of the day your mileage is deducted, if as long as you're working, going around town, because your commute mileage to the office is not deductible, but so your commute to your PO box a mile away isn't deductible, but the rest of your day would be. So that's a little tidbit. So you have those deductions. That got home office deduction, but that's one of the things you have to be careful with, because that's a big red flag IRS audit issue. The reason being is that people abuse that. They'll say, well, I have a 2,000 square foot home and 1,000 of it or 1,500 of it is business. So they try and write off all of their home expenses to their business. Well, the way that the law reads, or at least in the gray area of it, essentially says that any portion of the home that you use that is exclusively used for business, you can deduct a pro rata or a percentage of the home expenses for that. So, for example, your bedroom would not be deductible. Your kitchen table doesn't work. The kitchen, that kind of thing, basically has to be a dedicated space. Like for you, it looks like for you, you have a dedicated space where you're at. That's your home. And you can, whatever percentage of that you can deduct against, and you can take a percentage of your overall expenses, mortgage interest, insurance, taxes, utilities, and deduct those against your tax. So those are two, the mileage and the home office deduction are huge ones. There's other ones out there, such as you can pay your children a certain amount. I believe it's up to the standard deduction amount. You can, if you have a child, there's a ton of other things out there they can deduct. And if you don't have a CPA that understands that, you want to have someone that understands the real estate business, because we hear that all the time. People are looking, hey, I'm looking for a CPA that actually understands the real estate business. And so we do. There's others that are great as well that do understand it. But just want to make sure, if you're a real estate agent and you're looking for that, you want to have somebody that definitely understands it.
Yeah, I couldn't agree more. It's yeah, somebody that is very familiar with real estate, how it works, and especially if you as an investor, which hopefully most real estate agents do become an investor themselves, and as you own property, there's a lot more rules and regulations you have to comply with, have an impact. So and it's different if you're a real estate agent owning rental property versus the average Joe owning rental property, right? So there's a lot more advantage to the real estate agent.
Yeah, and there's some key things there too as well, Paul. And I'll kind of talk about this, but also the ways they can kind of structure for them as well. One of the things, if you're a real estate agent and you have rental properties, you can elect to take the real estate professional deduction. How that benefits you is that, if example, if you bought properties and maybe you're renovating them, or maybe you have a short-term rental and on paper you don't owe tax, you have a loss. If you elect that real estate deduction, you can actually take those losses against your regular income. I know this is kind of tax speak and may not be above some people, but for me as a layperson, and I'm not a real estate professional, if I have a rental property that loses money, or say you have an international investor that have a rental property that loses money on paper, it's not really, they don't really, but it shows on paper, we cannot take those losses to offset our income. But you as a real estate professional can. So you want to make sure you take that real estate professional deduction. Now, one of the other key things that we hear all the time, that I hear when I'm around town, when I'm speaking at an event or doing a seminar on real estate tax for realtors, is that if you're not incorporated and you're getting to the point where you're making a pretty decent amount of money, you need to be. One of the recommendations we say is the S corporation. And the reason for that is, and we don't have time to go into all the details of that, but let's basically suffice it to say that if you have that corporation set up, you want to be able to take a salary. Now, this is your own money, but you're basically taking a salary on paper to show the IRS that I have a salary. And without going into a lot of details there, we can explain, and I'm happy to talk to people about it, but essentially you're saving yourselves thousands of dollars in self-employment tax by being incorporated and taking a salary. So that's one of the huge things. I spoke to a real estate agent at an event a couple of years ago. She was with another CPA for years, had an S corporation. The CPA was not paying her a wage, and so she was basically giving the IRS money that they didn't deserve. She was with another one that understood her business at the time I met her. And so she was saving herself a ton of money. So it was basically explaining, hey, the things that we talk about are real. So it's super important, again, to have someone that understands your business. whether it's a CPA, enrolled agent, someone that really has that understands the business and has experience in the real estate, industry.
Yeah, absolutely. And just to touch on that a little bit further with the, being an entity, there's a lot of, there's CPAs that'll be like, oh, well, don't bother doing that till you're making money or making 60, $70,000 a year, then it's worth it. Right. I'm a firm believer that, look, you entered into real estate, you need to create a business, right? Don't wait
Right.
till you start making money. Start operating as a business, get the entity created from the get-go. So, because you also have the time to do that. But then
Right.
as you're moving forward as a business and not just as a solopreneur, hoping to make some money. It's like, no, you got to function as a business. And so, and set yourself up as a corporation and then as an S corporation is critical. And we won't dive into it here, but just a note, if you're watching this and you're thinking about incorporating, there is a certain way that you need to do it as a real estate agent. You got to incorporate your name. So Paul Fedynich LLC, Paul Fedynich
Right.
PA. That is what goes on your license. So, and that's a conversation for another time for sure,
Yep.
but certainly worth doing it. And it saves you. I've been an entrepreneur pretty much all my life. And every time I've started any business, it was always an incorporation and an S Corp. And over the years, it just saved me a ton of money. It really has. So
Absolutely.
thank
Yeah.
you
And
for that,
that
Stephen.
mindset, I like what you said, that mindset, you're running a business, so
Yeah.
if your mindset is I'm just working, I'm doing this, but if your mindset is a business, that's going to promote you, and you're going to, it's going to make you grow because you have that
Yeah.
right mindset. So absolutely.
Absolutely. And it is all, I'll tell you what, without the right mindset, I mean, you're just not going to go for it, whether it's this business or any other business. And, it's not, you're not coming in, punching the time clock, working 9 to 5, people telling you what to do. You really have to be an entrepreneur and you've got to create that mindset, and anybody can create it. It's definitely learned when you step into the arena. You've got to be you got to set yourself up as a business in order to succeed. So yeah, so we touched upon some really good strategies for agents, and of course, buying some investment properties, that's really important. So are you seeing, being that you work with a lot of international people,
Right.
what kind of trends are you seeing right now from the international market and into our Central Florida market?
Sure, Paul. Well, one of the trends, and most people, and this is trend has probably been going on for, that's really at the tail end of it, is for years, the residents of Europe and UK especially did a lot of buying here in Central Florida.
Mhm.
It's just a great place to bring families, and they had families, they had money to come and buy homes. Homes were inexpensive, at least from their perspective. So we had a lot of British people 10, 15, 20 years ago buy properties here in Central Florida. Now their children have grown up, they've aged out of coming to Disney, and they have their own families, that kind of thing. So what's happening is these people made a ton of money on their homes. So there's a couple factors. You have that. You also have exchange rates are favorable for them now to take their money out of the US and bring it back home to their home country. So as far as the trends for the UK, that's really what we've seen. We saw a huge spike the last few years with FIRPTA for UK owners and people from Europe. Other trends right now, obviously, South America, countries like Colombia, because of some instability or concern with instability, a lot of Colombians looking to buy in Florida, Mexico as well. Obviously, in the past, Venezuela, but a lot of people in Venezuela had gotten money out. Brazil's still a hot market. People buying from Brazil here in Florida. Trying to think
Mhm.
of other ones that I know of. But as far as coming here to Florida, those are some of the big ones. There also was a big influx of Chinese investors as well, but that waned a bit since the new laws and regulations were put in regarding
Mhm.
ownership in Florida. I mean, it's not impossible for a Chinese national to own property in Florida, but it's definitely a lot more difficult. But there's still, those are really some of the hot markets. And I would be remiss not to mention that Canada is still huge. In fact, yeah, Canadian investors love Florida. It's they get out of the cold, they have a place in Florida to come and vacation. So that's still huge. In fact, we're actually going to, as a company, going to Toronto for Realtor Quest coming up in May, just because we want to connect with a lot of the investors and real estate agents to make sure we can help their clients out. So Canada is still huge in Central Florida, still growing.
Yeah, and I've
So
heard a lot of agents from the Central Florida market that have gone up there to Toronto for that. That's supposed to be a huge, huge conference.
yeah,
So
it's 10,000. They had 10,000 attendees last year. It's really basically the largest real estate show in Canada, I believe, and 10,000 agents last year, 10,000 attendees. I was there as part of the Aura delegation last year, Orlando Real Estate Realtors Real Estate Association. It
uh-huh.
was just a busy, busy booth. Florida Realtors was there as well. So it's definitely, it's, if you work with international buyers or you're looking for that, that's a great place to go and connect if you can. Certainly we
Yeah.
can connect you with people there as well. So
Yeah, that's great.
yeah,
Sounds like a wonderful plan. It's my wheels are turning. I was like, maybe not this year, but maybe next year we need to look at that too. Because I mean, why not take a trip to Toronto? It's a good time of year. It's a lot
yeah,
warmer,
yeah.
warmer there in May.
No, absolutely. There's
So,
no snow on the ground. It was chilly a little bit, but it was pretty nice overall. So yeah,
yeah, yeah. So it's a great area, and yeah, you definitely will meet a ton of people and open up some new doors for yourself. So this is an easy way right there to tap into that international market. And of course, going to Toronto, you're going to have a lot more English speaking foreigners to work with. I can't speak another language, so for me
right.
trying to work the international market is definitely a big challenge. But I can speak English okay. So
Yes. Same here.
yeah.
Same
So
here. Yeah. Yeah.
that's cool. Let me backtrack. We were talking about entities, corporations, and so forth. I did want to touch upon the new FinCEN thing that just started this year, the Corporate Transparency Act. Why don't you touch upon that real quick for people and share what they need to do?
Sure, Paul. Happy to do that. So essentially, the Corporate Transparency Act that was enacted, I don't know exactly the date that was enacted, but basically it came online January 1st of this year. So what that essentially means in lay terms is that anyone that is a major owner, investor in any kind of corporate structure, LLC, corporation, foreign corporation, there's any kind of variations of those kind of things, LP, limited liability partnership, et cetera. Any of the beneficial owners essentially that are 25% or more owners of those corporations, if you are that owner, you are required to submit to the FinCEN, basically the financial crimes. It's the Treasury Department's financial crimes enforcement network. You're
Mhm.
basically required to submit to them your information, who you are, your address, ID numbers, et cetera. There's a list of things. The key thing here, Paul, is that if you don't do that, and the fines can be up to $500 per day, up to $10,000, and a 2-year jail term. So
Yeah,
this is serious business. So if you have
yeah.
not heard about that, it's the Corporate Transparency Act. And now, if you had there's some complicated timelines on this. Suffice to say, if you had a corporation that was open in 2023, you basically have until the end of this year to send that report in. Okay, it has to be done right. You want to make sure because you don't want to mess it up. Also, if you have a entity, I believe it was started on January. I'm looking at it. If you start one in 24, you have 90 days to submit that report. And I think if you had it like January 1st or something like that, you have like 30 days or so. I can't remember the exact date on that, but I know you have like 90 days to report that once you open that entity from going forward. That's something that we've keyed on with our clients, and we're helping them get those done for them, as well as any people that don't have a CPA account that need that reporting done. We're happy to help them with that, but it's definitely a serious thing that's come about. And the reason behind that, Paul, is they're trying to basically open the doors to see who are the people that are using these corporations for money laundering, things that are not legal. So it's not really an attack on us that have those kind of businesses, but it's more of just they're trying to delve in to find out who's doing money laundering, who the owners of these companies are, and they can put pressure on them to kind of stop those kind of things, essentially.
Yeah, because when we create an entity, we're creating that at the state level, but that doesn't really go to the national level. And of
Right.
course, even filing for a subchapter S corporation, it's still not quite the same, right? So it's reporting to a certain part of the government that tracks the money laundering and trying to keep an eye on things. I mean, title companies already have to report certain things, certain types of activities
Right.
like big cash transactions and things like that. So that's already been going on for quite some time, but now it's time for us, to really do that reporting too. And it is unfortunate that, it's more
Yeah.
paperwork, that we need to do, but it's minor enough that, I looked at the process to file. I haven't filed myself yet, but
Yeah.
I looked at the process back when I learned about it in January, and I'm like, okay, yeah, it looks simple enough. So definitely, reach out to Steve if you need some help. His organization would be more than happy to
Yep. Yeah.
help you with that. So, Steve, any other last minute types of tips that you can provide to real estate agents that are looking to, maybe they had a decent year last year and they haven't been able to get the money spending on the books in 23, but what else can they do? Like they have some time till they have to file April 15th, right? They could
Right.
still set up something in order to save some tax dollars, right?
Yeah, yeah, absolutely. Basically, it's just a matter. One of the key things you want to keep good records with whatever you have, what are the expenses you have, your income. It's important. I think we did hit on this before. It's not too late to set up a company if you're in the business right now, and you want to make sure that you kind of get that process rolling. But yeah, those tips as all we talked about before, just getting things set up ahead of time. Use a good software such as QuickBooks Online, or if you don't have a lot of transactions, you can use Excel, but just stay organized. It makes your life a lot easier. It's less expensive for you if you bring a shoebox full of receipts to us, or you bring us a nice QuickBooks account. The QuickBooks account is going to be much less expensive to do your tax return as if you bring a whole shoebox of
Yes.
stuff.
Mhm.
We have horror stories about that. Won't go into that
Yeah,
right now, but
sure.
it's definitely going to cost you a lot less. It's going to help you, and we can help you set that up as well. Any good CPA accountant can help you set up your own account. They can get the accounts right for you. They'll make adjustments throughout the year. And I want to say things too, Paul, as far as tax and accounting, that we feel as a company, there's no cookie cutter way of doing things. Not everybody's situation is a little bit different. So we try to be responsive to our clients' needs. We're not going to come to every client and say, you need this, you need this, you need this. It's really what's best for them. And that's what we do, a free consultation for everyone. Hey, come in, sit down, let's tell us what your needs are, what you're looking for, and we'll recommend what feels best for you. And then you can tailor things to yourself, what you want to do as well.
Yeah, that's great. That's some great advice. And while you were talking that too, it's another thought that came to mind is that for those maybe new to the industry and started making money in 23, don't wait to pay your tax bill on April 15th, thinking, well, I don't have to pay till April 15th. No, that money was due, and
Yes.
you're going to get penalized for it. So have an idea before the year ends.
Yeah.
Like we had a big fourth quarter. And I'm like, we've been making quarterly payments throughout the year. And I'm like, man,
Right.
we had a big fourth quarter. We better write a check. So we wrote out a nice big check to Uncle Sam
Yeah.
at the beginning of January to go with our fourth quarter payment. And as it turns out, we're gonna have to write another check, but we're gonna have to pay a penalty on
Yeah.
that, right? It's just
Right.
the money was due back then. It's just that you file your return by April 15th, and if there's money that was due, they're going to be like, okay, well, you
Yeah.
owe us penalty and interest, and that's not fun.
Exactly. Yeah. And generally, the corporate returns are due March 15th, depending on when they fall. So, and that's a really good point. I'm glad you brought that up as far as the penalties. Yeah, you can just get with someone, like you can come to us and we can look, hey, listen, you're probably going to owe this. Send the money in. That saves you the penalties. Get it done if you have it. They can put you on a payment plan as well. And then we can do your tax return anytime throughout the year. So it's not like you have to get the return done now, but you do want to pay to avoid penalties. Unlike me, who gets penalties every year because, as they say, like doctor heal thyself, but we as accountants, I don't do my return till end of the year. So
Yeah. And that's what when I was first a real estate agent, yeah, I was constantly paying penalties because I was late filing my quarterly returns and all of that. And I learned the hard way. Lately we are on time. I know the rules. I've learned them over the years. I've paid some hefty penalties, but now it's like, okay, we're on the up and up, and we're coasting along here. But at the same time, ours has become a little bit more complex, and so here we are. We're going to be coming to you and not trying to do it ourselves, because we can gather everything. We won't come with a shoebox, but we are going to come with everything well organized. And just again, for those that are watching this, if you're in the Central Florida area, through Stellar MLS, we get an app called Hurdler, and it's free. So I stopped using the QuickBooks app that I was paying good money for, and now I use Hurdler. It tracks my mileage. So every time I drive somewhere and stop, it dings me, and it's like, okay, I could swipe left for personal drive, I could swipe right for business, and categorize it. And then my credit cards and my bank account are all connected. So as things come in, I can put them right into a category right then and there. And so at the end of the year, I just print out the report and boom, and it tells me quarterly, okay, this is about what your tax will be. So yeah, so it's actually a pretty good app, and whether it's that app or another one, do something like that. The technology is there to make it real simple for you. And then, of course, work with a CPA that looks everything over at least quarterly for you, so that you're on track and don't end up having to write a big check to Uncle Sam at the end of the year. It's no fun. It's nice to have the money in the account to do that, but it's still no fun. Steve, I want to thank you for coming on here today and sharing your insights about taxes and the real estate market and FIRPTA and the FinCEN Corporate Transparency Act. And this is just a lot of great useful information for real estate agents out there, especially if they're just getting started, or if they've been in the business. I mean, I've been 21 years in the business, and the FinCEN, this new act is like caught me off guard. Didn't know anything about it, and so as soon as I learned about it, I wanted to be able to share that with everybody, because people need to know about it, because there's still a lot of people that have no idea. So we appreciate all of your knowledge and insight on that. So if somebody wants to reach out to you and maybe ask you some questions or hire your firm, how do they go about reaching you?
Sure. Thank you, Paul. Again, thank you for having me on. Appreciate it. Happy to do that anytime with you and your viewers. So best ways to get a hold of us, our phone number is 863-968-1010. They can check out our website, which is new, by the way, brand new website we just launched. Very user-friendly, a lot of great information. It is www.hbitax.com. And you can email us also at info@hbitax.com as well.
Awesome. Yeah, that's great. It's real simple then for people to reach out. They can check out your website and make their inquiries right there. And I'm sure you've got a lot of useful information on your website too that people can look at, and maybe there'd be some help there. So, Steve, thank you so much. I appreciate it, and we look forward to seeing you out and about at the next event.
You betcha. Thanks, Paul. Thanks for having me. I really appreciate it.
Thank you, Steve. Take care.